Hello and welcome. You're tuned into Ask Profit on NDTV Profit. I'm Smriti, Chaudhary, and with me is Mathew. And on this show, we'll take all your stock-related questions and get them answered by a fundamental and technical guest. But before we move on with that, let's take a quick check on where the markets are faring at. Alex, how does it look for the markets? We're seeing the benchmark index up about 0.3%. But do tell us more what stocks are moving and how does the broader market look?
Absolutely. In fact, let's pull that up and give our viewers a sense of how things are looking. As Smriti pointed out, gains of about 0.33%, not too much to speak of. And in fact, the broader market's also doing reasonably well. So the Nifty 50 at above 22,000 and holding. And you have the broader markets also that are gaining a little bit of ground. In fact, the advance decline ratio should suggest gains at this juncture, and that the advances are in fact, you have the Nifty Bank, of course, that is gaining about 0.4%, the advance decline ratio in favor of the advances right now. Now, let's pull up the heat map because that will give you a bit of a perspective of what the texture is, at least for the benchmark index. And on the top of the screen, you will have the likes of Bajaj Auto as well as Hero MotoCorp and a couple of other names. But at the bottom of your screen, you have in a line, you have Wipro, HCL Tech, Infosys, LTI Mindtree, TCS, all of them losing ground. In fact, if anything, they are off the low point of the day. In fact, let's pull up the intraday chart of the IT index, and you will see that at one point early on in the session, it was down about 3% or thereabouts, and it's now significantly off that low point of the day and trading with cuts of about 1.8%. To tell you why that is, Agam is joining in to give you some perspective. As you can see, as I was pointing out, 1.8% or thereabouts. To tell you what this is all about, because you had Accenture that came out with a revised guidance for the current financial year, and it was a bit of a disappointment. But what does that mean for IT companies and IT stocks in general? Agam, what can you tell us?
Right, so let me start off with what Accenture has suggested. Like right at the top, where we do understand that the company has cut its forecast for fiscal 24 in terms of its revenue growth to around 2 to 3% from 2 to 5% earlier. Now, the company has seen a decline of as much as 2% in its new bookings, and the company says that they see pressure in volumes for some of your relatively smaller deals. Well, they have seen continued influx as far as your larger deals go, but the revenue accretion is not as fast as what you see in smaller deals. More importantly, they say that financial services vertical has seen a decline of as much as 6%, and the health and public services, on the other hand, has seen a growth in 10%. But clients have seen a restriction in terms of their budget. Discretionary spending has been extremely limiting, and there has been a slackness when it comes to the demand scenario. Based on that, we've had a couple of brokerages who have come out with their own read-through on the impact on Indian IT sector. So, well, we have Jefferies, which suggests that Accenture has highlighted rising constraints in tech budgets, and there has been a slowdown in managed services. And what will also not bode well for the Indian IT space is the rising weakness in the financial services sector. Based on that, they also are negative on Tech Mahindra, Coforge and TCS. They also mention a thing on the valuations, where we understand that the IT valuations stand around 26 times at the moment. That is the Nifty IT index, which is at a 13% premium to its 5-year average, and it is also at a 29% premium to its to the Nifty 50. And that does mean just a little bit of an overvaluation as compared to the rest of the market. Moving on, Nomura also has suggested that client discretionary spending continues to tighten. Clients continue to prioritize spending or not spend, and rather optimize their costs going in. And well, based on that, there is a little bit of an opportunity when it comes to cloud adoption and data standardization. But they do like Coforge, Birlasoft and eClerx, but they have a reduce on something like a TCF, Wipro and LTI Mindtree.
All right, thank you, Agam, for that. Now, on that note, let me introduce you to the guests for today. We have Ashish Maheshwari, Director at Arihant Capital Market, and Swati Hotkar, Senior Equity Technical Analyst at Nirmal Bank Securities. Thank you so much to both of you for joining in. And Ashish, I'll start with you. We've heard about Accenture's commentary on IT, and it seems like this recovery that analysts were predicting for Indian IT is probably not not going to happen, at least for a while. So basis this, now this commentary is in, and we've seen there's going to be some impact on the Indian IT companies like Jeffries mentioned, TCS, Coforge and Tech Mahindra. How are you seeing this kind of play out, and are there any names that within the IT space that you're still constructive on?
Yeah, first of all, even after lackluster performance of Accenture, I'm not that bearish on IT indices now. First of all, already Nifty IT index, if you will see, it's already 3,000 points below 52-week high. So already slower growth in this particular sector is factored in. Second thing, in spite of winning deals of $21.6 billion, which is record second highest record deal winning, Accenture is still highlighted that growth will be in 1 to 3% range. This similar thing happening with TCS and Infosys also. They are also winning decent size wins, but showing the guidelines in similar territories. So I'm not that bearish. If you ask me, in my view, what was the knee-jerk reaction we have seen today? What bottom of Nifty IT index was made today? Already it has retraced by 600 points from there. And in my view, at this point of time, we should selectively accumulate good large cap IT plays like TCS or Tech Mahindra, along with mid cap IT play like Emphasis or Coforge and Persistent Systems.
Okay. So those are the names based on the fundamentals that Ashish has mentioned. Swati, I very quickly want to come to you as well on the technical indicators that you're seeing for IT. Intraday, of course, we've seen a retracement, as Ashish has pointed out, quite a sharp one at that. Would you say from the technical indicators that a bottom has been found?
See, if we are looking towards the longer term horizon on the Emphasis, yes, definitely we have seen that the stock has tested its 200-day moving average, which comes to at around 2300 levels. And we have seen a bounce back rally in this particular counter. So we might witness some pullback rally, and the stock has taken already the support on the technical ground, and this rally is likely to be extended towards 2550 to 2600 levels on the Emphasis part. But looking towards the Tech Mahindra charts as of now, I believe that the bottom has not been formed yet. We might witness some more selling pressure because there are the cluster support levels at around 1220 levels. So up to that level, we can witness a correction into the Tech Mahindra charts. So one should wait for a long positions. Any dips, if we are getting towards to 1220, one can take a long positions. On the higher side, the resistance the stock is facing at around 1300 levels. Once it manages to clear that resistance level, then only we can witness some fresh buying in this particular counter. So I will suggest to wait and watch on the Tech Mahindra, but definitely one can go for a long into the Emphasis because the risk reward ratio is favorable in this particular counter.
All right, thanks Swati for that. Now let's jump into the questions, but let me remind you first that if you haven't already written to us your questions, you can write to us on the WhatsApp number that's on your screen or through any of our social media channels or the YouTube live chat. But let's start off with the first one. This one's from Sujay from Kolkata, and they're talking about AU Small Finance Bank. Now, they've bought the stock at 569 a piece. It's slightly elevated from where the price is currently is. Now, basis this, they want to know the view for 1 year. In terms of 1 year, Ashish, how does it look based on the fundamentals on this smaller bank, a smaller player within the space?
As far as AU Small Finance Bank is concerned, after many years of good performance in capital markets, now we are witnessing a lot of pressure, and this the reason the stock is near 52-week low also. So I'm not advising AU Small Finance Bank to purchase at this price. We have seen some slowdown in their growth also. Last quarter was not that great for the bank. So my suggestion will be you can exit from this bank and look at other private sector bank like Catholic Syrian Bank or DCB instead of AU Small Finance Bank.
Okay, fair point. I'm going to take a relatively shorter term question now. It's from Akil, and he's asking about Canara Bank. He's holding 2,000 shares at levels of 590, and he hasn't really given us a time frame, so I'm going to interpret that as a question on whether or not he should continue to hold. Swati, based on the charts, what should he do?
See, Canara Bank is really definitely a good counter on the banking front because in this particular year, we have seen that in 2023, we have seen the breakout of head and shoulder formation. It has given a very good rally up to from 250 to almost 570 levels. No wonder we might witness some profit bookings after such kind of a steep rally within a very short period of time. But as of now, if we are looking for a longer term horizon, at least for 1 to 2 years, definitely this particular counter looks really good upside. I believe it has a potential to reach up to 650 to 700 levels further. So one can look for a portfolio. Definitely this particular counter can hold. And if he's looking for any trailing stop losses, I will suggest to keep maintaining the long positions by keeping a 540 stop loss. And for the short term purpose, the target will be at around 640.
All right, understood. Next up, we have a question from Nandan from Bangalore, and this is on Delta Corp. They've bought the stock from a longer-term perspective at 189 rupees. It's currently trading at around 122. From a longer-term perspective, Ashish, something like a Delta Corp, we've seen some GST demands come in for this as well. While that continues to remain an issue, how does it look based on other factors, other fundamental factors for Delta Corp?
Yeah, there's again a lower, the less performance stock if you see in hotel sector, and continuously we have seen sell off in this stock, and stock is also at near 50-week lows. So I'm also not a great fan of Delta Corp. If we see, even the performance quarter over quarter, their net profit dipped by from 16 to almost 34-35 crore, which is very low profit looking at the market cap of company. So instead of this, I'll suggest you invest in Lemon Tree Hotels at this price, because the way tourism is growing, this company has a very good potential, and and if you sell Delta Corp Lemon Tree, maybe in 6 months, I'm expecting 170 plus in Lemon Tree. So better to swap Lemon Tree with Delta Corp.
Okay, interesting. We've got another question on Titan, and Vinay has not specified what really he wants to know about this. He's simply given us the stock name, so I will take the liberty of interpreting that as a question on the levels to consider when deciding whether or not to get into this stock. The stock is up about 1.5% and trading very close to that 3,680 level. Swati, on the charts, how does it look?
Yes, Titan really looks very good on the technical front for a larger degree. As of now, it's just 200 points away from its all-time high. The weekly charts, it's really a bit showing us cautious sign because the counter is just showing a negative divergence from the overbought zone. So some sort of a profit booking can be witnessed in this particular counters. But I'm assuming that probably he's going to hold for the long-term positions. I believe that the stock has a very good potential to reach up to 4,000 levels and beyond that levels. But as of now, it has a very cluster supports level of 3,500 levels. So as long as it sustains above that level, I believe the overall technical setup of this particular stock is really on a positive end, and one should hold the long position.
All right, got it. Next up, we have a question from John, and they're talking about the counter Natco Pharma. Now, the question here is, Swati, will it go down from here on? It's trading at about 0.5% gains. If you can pull up the 5-day chart and see how Natco Pharma has been doing in the last year. It's down in the last couple of sessions, a bit of a chop and churn there. But is there a particular sort of level where you would suggest accumulating this stock?
See, Natco Pharma has shown a very good rally in the month of the February or such, from 830 to almost 1100 levels, and from there onwards we are continuously witnessing a profit booking or say the selling pressure, and the stock is trading in the formations of the lower tops and lower bottom formations. I believe as of now it's not showing any kind of a reversal from the lower sides, but yes, it has a very good support at around 930 levels. So one should wait for that levels, then only if the particular counter shows any kind of a reversal at that point, 930 levels, then we can initiate a buy call. But till the time, I will suggest to wait and watch. Don't create much long position in this particular counter. Buying positions can be attracted only if the stock manages to give a breakout of 990 on the higher sides, and only we can witness some fresh buying positions, which might take a counter to us to 1100. But as of now, the view is a little bit cautious. Stay away from this particular stock.
Absolutely. Considering the kind of run that it's had over the last 12 months, 70+% of gains for Natco Pharma. We have to slip into a very quick break, but we got more time on the other side to ask all of your questions, so do stay tuned.
Welcome back. You're watching Ask Profit. Let's dive into the questions again. This one's from Amit Rastogi. Now, Ashish, this is an interesting question. Now, Amit says that he's been holding HDFC Bank and Kotak Mahindra from a long time, and with both with minor losses at this point, and he wants to sell one of them. So if you have to pick one from HDFC or Kotak, which one would you continue holding and which one would you sell?
In fact, coincidentally, both these stocks are underperforming. If you see overall the banking sector performance, so if you ask me, you can exit in fact in both these stocks and swipe to performing banking stocks or where the good potential is there. So I'll suggest again the frontline banking stock, which is IndusInd Bank and Axis Bank. You can invest money there, and there at least more momentum will be there compared to HDFC and Kotak. And in fact, if you want to still retain one, I'll still suggest you can retain HDFC Bank and exit Kotak Bank.
Okay, but I'm surprised that you haven't spoken about ICICI Bank, Ashish. Is there a reason why?
No, ICICI Bank is again a performer bank, but I'm looking for higher alpha, so which I found that IndusInd Bank can offer better return.
So read between the lines, viewers. That's what Ashish is saying about the private banking space. The upside potential for ICICI Bank is limited, and that's my interpretation. Maybe Ashish can correct me if I'm wrong. All right, but the next question is on Patel Engineering, and we've got Thomas from Kerala who's asking about this. 1,000 shares is what he's bought at a price of 72. I must point out that we've got a conversation with the management lined up, if I'm not mistaken, at 12:30 today. At some point, you will see it over the course of today and tomorrow, so watch out for that. But he's asking Thomas whether he should exit or hold at this juncture. So, Swati, I'll come to you on the charts. Should he hold? It's at 57 or thereabouts right now.
See, currently, as of now, if we look on the technical front, yes, definitely the view is a bit cautious because it's showing a negative divergence from the overbought zone. That's why we are witnessing some selling pressure in this particular stock. But I believe the previous low, which comes to at around 53 levels, it might hold that level and we might witness some turnaround or say the pullback around in this particular stock towards to 65 to 70 levels. So I will suggest to hold on, take a maximum risk of more 3 points from here onwards. That is 53 rupees stop loss you can keep and carry the long positions. If you're getting any high rise towards to 65 to 60 levels, one can exit the long position.
All right. Next up, we're talking about the counter, Hudson Agro Foods. This one's from Vijay Kumar from Tamil Nadu. Now, the question here, Ashish, is from a longer term perspective, would you suggest buying the stock? And if you look at how the stock has performed in the last couple of days, it has been under a little bit of stress. So maybe this sort of correction, would you say, is a good buying opportunity into the stock?
Stock is very good. In fact, 25,000 crore market cap company. This is valuations are quite rich. Only last quarter performance was not up to the mark, where we saw some decline quarter over quarter in the performance. But nevertheless, as a company is very established company, and in this summer, because this is going to be record summer, so there will be good demand for dairy-based product, where Hudson Agro will do well. Along with Hudson, if you want to add any stock in this particular sector, I think Parag Milk Food is another good company where you can bet on.
Hudson Agro?
Yeah, you can continue to remain invested if you have already invested, is my.
Okay, fair point. No specific target, but continue to hold based on the fundamentals is the view. Suntec Realty from the real estate space is what we're focusing on next. And this is a question from Jay Krishnan. He's writing in from Kozhikode in Kerala. And he has bought at levels of 477 for the medium term. He's wondering whether to hold, average, or shift to another stock. And if you are suggesting a shift, Swati, he's asking you to suggest a name. What's the view on the chart?
As of now, the view is a bit cautious on the monthly chart. The stock has given the formation of the cup and handle formation, but it has not given the breakout of the same levels. And we have witnessed a huge sell-off from almost 500 to 380 levels. As of now, I will suggest to hold this particular counter because we have seen a major sell-off in this particular stock and probably we are going to witness a pullback rally towards to 440 to 460 levels on the higher side. So I will suggest to hold this particular counter. Don't enter into this another pick, but definitely you might witness some pullback rally in this particular stock.
All right, got it. Next up, we have a question from Sri Kishore Sharma from Bihar. Now, we're talking about two counters here. Karnataka Bank, where he bought 450 shares at 440 apiece, and Polycab, where he bought the stock at 4,700 levels. Now, Ashish, from a longer-term perspective, this is for 2 years. Karnataka Bank, I think there's a QIP that they have announced, and Polycab was, there were IT raids, and from what I know, I don't think there is a demand notice yet into from that the company has received. Now, from these two perspectives, from a longer-term perspective, based on fundamentals of the company, would you suggest holding on to these for the next 2 years?
Yes, I'll advise both these stocks you should remain invested for next 2 years. Karnataka Bank, again, 8,000 crore market cap bank and doing very well. And I don't have any doubt that they will have any issues raising capital by QIP also. And it is just 50 rupees away from 50-week high. So good time to accumulate a good quality bank like Karnataka Bank at this price point. 2 year my target will be around 350. As far as Polycab is concerned, we have seen a big knee-jerk reaction where stock went down by almost 2,000 rupees from the highs. But after that, we have seen continuous consolidation and the stock is continuously moving up. So from 3,700, stock is already almost at 5,000 rupees. And this particular quarter, I am expecting very good set of numbers from Polycab because of the way copper prices have moved up. They are going to have a lot of inventory gain. At the same time, they have taken price hike for their cable products. So for result also and otherwise also, I'm bullish on Polycab. And next 2 years again, you will see 6,500 kind of target possible here.
Quite a significant upside potential based on what Ashish is looking at. Hotkar is the next counter. Let's pull up the chart. In fact, the year-to-date chart of Hotkar. We've got Naga Sudarshan Rao, who's writing a question from Hyderabad, and he's wondering what the outlook is on the stock. It's gained about 50% or thereabouts in the year-to-date period. Swati, on the charts, is it still a buy for you?
Yes, the view is definitely positive. If you look on a larger degree, on a weekly or the same monthly chart, the stock is giving a formations of the flag pattern and it's on the verge of giving the breakout. As of now, from the last few trading sessions, we are witnessing very sideways momentum or say the consolidation momentum in this particular stock, and the stock got stuck within the range of 200 to 170 levels. Once it manages to give a breakout of 200 levels on the closing basis, I believe we are going to witness very massive momentum on the higher side towards at least 240 to 250 levels. So one should definitely carry the long positions in this particular counter by maintaining at least strict stop loss of 170.
All right. Thank you so much, Swati, for answering the questions that you have. And thank you so much, Ashish, as well. Unfortunately, we're completely out of time on this edition of Ask Profit. But we'll be back on Tuesday and we'll take more questions. But until then, have a happy Holi. And thank you so much for tuning in. Stay tuned. Lots more lined up on NDTV Profit.